What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is December 18th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I'm not only going to be sharing some of my top altcoin plays that I'm watching here for the next couple of weeks that could do 100, 200, even 300% moves in price, but outside of that as well, I want to talk about a make or break price level when it comes to indicators that we're watching for both Bitcoin and altcoins, where either bulls need to show up to the plate, or it likely means that we're heading for lower prices for much better entries. We've got a lot to unpack here in today's video, so if you guys happen to enjoy it, consider dropping a like. It's one of the greatest ways you can support the channel. And before we dive into the analysis, if you're looking to support those who need it most, we're doing a charitable auction through TeddyDAO, where we created a custom Teddy NFT themed around DataDash, and you guys can not only set your own bids to earn the NFT, but all the proceeds for it go to your charity of choice. This is a really awesome cause. I'm glad to be a part of it, and I've been following what TeddyDAO has been doing for some time, so if you guys would like to participate in it, I'm going to leave a link down below in the description. I think it's the festive season of giving, so if you guys are interested in participating, let's set a bid much higher than 10 GLMR here. So just want to let you guys know about that. But let's go ahead and kick things off here, guys. I want to start here by talking about Bitcoin, because Bitcoin right now is sitting at roughly around an 8 or 9% correction from its relative highs, and it looks like it's steadfast here to retest those lows on December 11th. That is unless we finally start seeing some buy-side support here in the next few hours at the 21-day. I want to zoom in here a little bit, although I don't want to be exaggeratory, but I need to make it very clear here that the 21-day moving average is highly significant. This is the big indicator here. I'm not going to just drag it on forever. I'll let you guys know. The 21-day is the central theme here of this video. It's the central theme here of our technical analysis when it comes to altcoins and this kind of short-term euphoric wave in crypto. Even if this extends on to a full bull market, or this is what we believe is more of a relief rally in the market, irrespective of where you stand, it is imperative to understand the significance of the 21-day. You can see here that as price is pulled back, the 21-day is where price finds its support. And we can see, going back through prior moves in the past, that the 21-day is a highly significant moving average where buyers usually come in. They did this in 2020. You can also see it as well back here in 2019, that every dip towards that 21-day, sometimes deviating a little bit below there, usually was bought up in trends. It is a highly relevant indicator or moving average when it comes towards the trend, or at least short-term trend, of optimism in financial markets. And this is not just true for Bitcoin here. It's also true for altcoins, as we'll dive into in a moment. But my main point here is that if we aren't going to hold on the 21-day, and we're already starting to see some of the early stage warning signs that the trend may be slowing a little bit, as the EMA, the yellow line, has crossed below the 21-day SMA, or the simple moving average. This is already your initial warning sign that we're not only maybe due for a pullback, but even potentially down towards some of the longer term and more established moving averages like the 200-day. And as we can see here, the 200-day is quite far away, albeit it is increasing over time as the price has been generally moving up over the last 200 days. So I would suspect that there's a good chance we could get Bitcoin not only potentially around this 38K range, but along with that as well, maybe even coming down towards some of those long-term moving averages. That might be a point where you have a better risk-reward profile, you might have better entrance. Either way, irrespective of where you stand and where you think it's going, watching how price interacts with that 21-day is going to give you a great gauge. If we get bought up here, right, and we swiftly recover on some of these past few days of losses, that can be your sign that we're going up towards the more optimistic target of 48 to 52K going into January. However, if you see a nice red close below that range, and even below the prior lows on December 11th, that's likely your cue here that you're coming down to 38K, or down here even towards this 200-day moving average if we start seeing that sell pressure come in big time, as many people might be pricing in that the ETF optimism is already done, a buy the hype, sell the news event, so to speak. Outside of that as well, we can see this on total. Total market cap for crypto has cooled down by about $130 billion here from the relative highs back on December 9th. And over the last 9 days here, we're not only coming down in price, but we're also technically below the 21-day moving averages. Now, it's okay to have slight deviations below these levels, but when you start getting a substantial close of 2 to 3 to 5% below that range, and the next day you're not getting buyers coming in, this is more indicative signs here that the trend is ready for a cool down. And that's okay, because total market cap here went from around $1 trillion towards 1.6 trillion. Like, yeah, it's a That's a big move there. As we've seen over the past couple of weeks, there have been some phenomenal plays in the market. Past few months have been pretty good for crypto. It's okay to have pullbacks here. And I'm not saying this to be some perma bear here, guys, right? The trend has been definitely strong here since that breakout above the 31K resistance back a few months ago. But outside of this, it's important to just understand, even if you're bullish, to make sure you have better risk reward setups for entry. Protect your capital. Be smart about your entries. Outside of that as well, the one thing I want to draw your attention towards is the fact that out of all of these metrics, all these indices that we track within crypto market cap and kind of the different sectors of crypto, total 3, the real kind of altcoin space, this is excluding Ethereum and Bitcoin, has been performing the best, right? So they're still technically, you're getting bought up here at the 21 day. So there's a lot of risk on sentiment here. That's again why the 21 day is imperative to watch here for discount opportunities. And you even have the 200 week here, a longer term potential base of foundation, which was support back here in November, that could potentially be that new range of support, not having to wait around for the 200 day. I think the more and more I look at this here, I continue to believe that small caps, and particularly the two sectors that we focused on, Bitcoin related infrastructure and meme coins, are the place to go. We are seeing here in Ethereum, XRP, BNB, and Sol, the EXBS index that we track here, the 4 largest plays by market cap, we're seeing weakness here. One of the biggest breakdowns against the 21 day versus Bitcoin versus total 3. A clear sign here that many of these plays are probably overextended here. And they did technically garner a lot more market cap expansion than, say, total 3 here, going from around 250 billion all the way up here towards practically around 400 billion. Total 3 here, on the other hand, again, while making a nice sizable move here, right, is made up of a larger pool of altcoins. So we've got a lot of small mid caps here that can make some much more substantial moves. Outside of this as well, one thing that again has me optimistic that even though again we may be expecting a little bit of a pullback here in the next few days if we don't hold that 21 day, we are likely getting towards the point here soon, guys, where the altcoin cycle, what we've really been looking forward to here, the real seismic moves, the acceleration in total 3, the kind of final blow off top here for the next few months, is likely to come soon. We can see here within Bitcoin dominance that time and time again the Lux Algo indicator has signaled when Bitcoin dominance peaks out. It's showcased here in July 2019, and again when we came down towards a similar range at 70%, which is where that resistance band was, right? We saw a major correction here in total Bitcoin dominance, similar to what we saw back in 2017. And while Bitcoin dominance is not as extended this time around, we are seeing that clear resistance playing out here, guys, in the monthly time frame. Again, things like Lux Algo can be incredibly powerful if you use them on these longer term time frames. And I had a lot of people asking me as well who are interested in getting set up with Lux Algo, how to have the proper settings. So I wanted to share that here with you guys. You guys can add these custom settings here. I make sure to have the smart trail marked here. I turn off most of the other things. And also, along with that as well, I take some of the kind of bullish and bearish indicator signs here. I mainly like to use the smart trail. There's so many different things you can utilize within Lux Algo. You get access not just to this indicator, but a whole range of other indicators that you can utilize in their indicator suite. So I recommend you guys check it out at the link down below in the description. You guys can get a really solid discount if you sign up for Lux Algo using the link down below. You don't need to put any of the discount code. It's already applied. But this gives you access towards a whole range of indicators within their product lineup. And it's one of the few that I genuinely like to utilize in my trading strategies. Albeit, unlike a lot of other traders who use it in the shorter term time frames, I use it on the weekly and monthly for longer term trend shifts, potential long-term resistance and support for price. I think it holds much more significance versus the shorter term time frames, in my personal opinion. All right, now let's go ahead and talk a little bit about the altcoins, guys, because we know our key focus here is the 21 day. But when we look at particular altcoin plays, especially the plays that we've been emphasizing on and the kind of sectors that we're interested in, what is it showing us right now? Well, what we see here is in the case of ordinals or Bitcoin related infrastructure, Ordi in this case has cooled down from around $67 per token down towards around $46, $47. And what do you know, right when we came down towards that 21 day, buyers started showing up here. So again, the important significance of this indicator cannot be understated. And we can see again, as we echoed over the last couple of weeks, back here in November, we came into that pocket, right? We were calling for that pullback, watching for this. We were kind of hoping for a little bit of a lower price range here, but the moving average has accelerated quite fast. And we can see here, during that week, buyers came and accumulated, driving up prices. So we want to continue to watch for that range here as we potentially anticipate this going up towards $100, maybe even more here, as this is, again, just right around $1 billion market cap, give or take. Sometimes it's around 900, 800 million, 1.1, 1.2 billion. But again, you guys know in crypto, when these things start to move, right? If you were looking at Ordi and thinking, oh, it's too expensive after it's gone from $3 to 28 and it's pulling back here, and I think that's the final top. Well, it went from around 19 bucks all the way up here towards around right under 70. That's still a phenomenal multiple. That's still outpaced the overwhelming amount of altcoins in the market. And the top 100 plays and the top 200 or 300 plays, we want to find those plays that are constantly maintaining the top performance of growth. Same here with stacks as well. A little bit more of a conservative play, but Bitcoin smart contract infrastructure, we can see here, it's one of the few plays up today, about 4.5%, was trading at around 8 or 9% for the day, but it's cooled down a little bit since. I think this is building a nice cup and handle formation, and it's still maintained against the performance of a lot of other altcoins in the market because the narrative is there. The Bitcoin ETF is the only thing that's got people excited right now in the market. Bitcoin is the only core cryptocurrency that's really carrying forward the market over these last few months, over the last year for that matter. And therefore, we need to look for plays that are tied towards the leading protocol, the leading narrative in the space, the financialization of Bitcoin, and how Bitcoin can potentially expand and become this huge monetary protocol. Anything that can build around it, anything that can be a sign of being related towards that protocol is going to be important. Outside of that, though, and this just, again, I think speaks to the current circumstances of the market and puts us into that question of whether or not we're in a long-term bull market. Irrespective, we are obviously seeing a short-term wave of optimism and speculation around meme coins. And that can continue for some time, guys. It might be that we're ready for a cool down here. I have no doubt about that. We're far extended away, in this case for Bonk, against the 21-day moving average. And it's sitting all the way down here at around 127,000 fractions of a cent. All right. So again, it's difficult to describe the prices here for these meme coins, guys. There's like hundreds of trillions in the coin supply, and therefore the prices are fractional cents per token. But you get my point here. You can follow here on the right-hand side. So just bear with me on that. The key point, though, is, again, 21-day, every time we got relatively close here to the 21-day, we did back here in December 13th, you had buyers coming in, driving up prices, single day, 90% move. We covered it in one of our prior videos. These are the kind of things to watch for, guys. And again, I have no doubt here that we could be going for a more steadier correction down to that 200-day, which is moving up very rapidly here. And that could be at a similar base here around 38,000. Maybe we don't, maintain that low, but potentially come here to 58,000. Irrespective, just watch how price interacts with those moving averages. You don't need me to tell you exactly what it's going to do. Everyone's guess is as good as mine there. The main thing we need to do is watch what price is telling us, and that will manifest over the next few days. For now, I think it's overextended, but you need to make sure you start preparing yourself for some of these potential setups. And again, great example here of how you see something like Bonk move up 31, 3,200%, going past the prior all-time highs back in January of 2023, and you think, oh, this is way overextended. I'm not going to pay that kind of price premium for it. I'm not going to buy this thing at a discount. It's totally done for. Well, if you, again, buy towards that 200-day, I'm not saying you needed to get it exactly right, but anywhere, even if you bought it at the all-time highs there, right, or you bought it on a nice pullback, you're talking about, roughly speaking, around a 500 to 800% move. That's still phenomenal. That's still outpaced the overwhelming amount of altcoins over these past few weeks and months. So my point here is that if you nail down the narratives, Bitcoin-related infrastructure, meme coins, you're going to have a much better chance at hitting the right darts on the board, getting the right plays. And outside of that, you have to be willing to pay that price premium, albeit get them at a nice discount. Get them at the moving averages, the typical ranges where buyers tend to come in. So you're not going to be left holding an empty bag. And you can essentially have a good risk-reward setup. So you're entering at a nice discount. And if it continues to pull, say, 25, 30, 35% from that point, yeah, that could be your sign to hit your stop, get out, and realize that the trend is likely over for some time. And then re-enter if there's later strength, right? That's the key point. That's how a smart trader approaches these things. And outside of this, well, we also have an emerging player, Bob. Bob is a much smaller play by market cap, but Bob here has done exactly what Bonk did. It fully retraced its losses throughout 2023. has been able to come up here. It looks like it may very well be forming a kind of cup and handle coming down to that 21 day. As that accelerates higher, price moves down lower. That's going to be a potential entry point that I'm looking for here. So again, these are the two narratives that we're really keeping an eye on here in the market. They're the areas where there's consistent returns, and irrespective of whether you like them fundamentally, guys, to be honest, I could care less about meme coins from a fundamental perspective. Ordinals as well. It's mainly speculation here. I think Stacks is a great platform in many respects, but for these plays here, we care mainly about the returns that they're bringing in the market. This is where the opportunity is to invest capital or trade in the market, and in many cases make some sizable returns, albeit again, you have to understand the risk that is associated with these plays as well. Nonetheless here, these are the plays of interest. So no matter whether or not this is a short-term relief rally in altcoins that could extend for the next few weeks and months, or we're really kicking off a new altcoin bull market, I think right here, right now, it is imperative that we filter out the noise and focus on the signal. We need to have our attention focused on the sectors of altcoins that are performing the best. I'm talking topics like we've discussed on the channel before, like Bitcoin-related infrastructure and ordinals, as well as other types of trends like meme coins and alternative layer 1 or layer 2 protocols that could potentially steal market share from Ethereum. But above all of this, even if we have our eyes on the prize, it's important to make sure we actually have an exchange platform that's going to give us the array of opportunities and altcoins to trade in order to actually materialize on those different opportunities and trends. That's why I want to spend some time to talk about none other than our sponsor, CoinEx. Now, if you haven't heard about CoinEx just yet, CoinEx probably has one of the biggest offerings for a centralized exchange when it comes to early stage small and mid cap altcoins. They have over 1,000 unique trading pairs on their platform for over hundreds of different cryptocurrencies from small to mid and large cap altcoins, and they hit on all of the trends we talked about earlier. So you're able to access the majority of these opportunities in all of these respective markets. The big thing I like about CoinEx is that unlike a lot of the new exchanges that have popped up over the last few years, CoinEx has been around for 6 years, which is a long period of time in the crypto space. And outside of that as well, they offer proof of reserves for transparency and security. This is a big point for me personally, and I think that this is something imperative that any exchange in the crypto space should be offering by now, especially after what happened over the last few years. So if you guys are interested to capture on some of these opportunities, if you're interested, for example, to trade plays like ordinals, you can access that within CoinEx, as well as a whole range of other different types of BRC20 tokens or tokens on the Bitcoin blockchain, as well as a whole range of other trends like GameFi, as well as particular plays in various emerging L1 and L2 plays, or in trends like DeFi, which we historically have been big fans of on this channel. For some of my market predictions going into the close of the year and into 2024, I think there's two things that I'm watching for. I'm not only watching for Bitcoin to come down here towards around 40K for a potential double bottom at this range of the 21-day EMA, allowing for one potential final rally to around 48,000 to 52K going into the potential ETF launch in January. One last final move here before essentially we see a longer term cool down post the ETF launch. Outside of that as well though, I've got my interest, as many of you know, on altcoins at the moment. And on CoinEx, there is a wide offering, as I mentioned, of BRC20 tokens, as well as meme coins, which have definitely been a big trend. But the big thing I'd emphasize here is that if you're going to be trading some of these plays, even though there is an opportunity to trade some of them on leverage, I recommend just sticking to the spot markets, as that is already going to give you enough of a potential risk-reward profile for some good trades. So if you're interested, check out the link down below in the description, and also keep an eye out as well on CoinEx's Twitter and on the exchange itself, as they're doing a ton of giveaways as they're celebrating their 6-year anniversary here in the month of December. So check out the links down below in the description if you want to learn more about that, but I definitely recommend you guys consider the platform as an exchange if you're considering to try to trade some of these plays like ordinals that we've been keeping an eye on here for some time. And last but not least, we got to talk a little bit here about global liquidity for the closing. On Wednesday, I want to do a video where I focus on the macro perspective and really try to answer that bigger question that we kind of hinted towards earlier about whether or not we're really ready for a new bull market. I know a lot of people are really excited about the soft landing theory and the fact that the Fed might have dealt with inflation and now they can start to rapidly cut interest rates, and we're going to go back to the easy times where things just go up and to the right. We've seen this in equities, we've seen it in crypto. I want to spend some time to talk about that, guys, because to be completely frank, we've only seen a 7% expansion from the lows in September of 2023 in stablecoin liquidity. And I think it's imperative that we don't get separate from the fact here that over the long term, we are still not seeing some massive acceleration to new highs and liquidity. We are not seeing anywhere near the kind of momentum and depth of move that we had in the past. Sure, we've had some short-term bumps up here, like the one we've had here over the past few weeks from around 24 trillion to 25.5, so $1.5 trillion expansion in global liquidity. It sounds like a lot. Definitely in the near term, it's a nice move. But again, we may be very well repeating history here from back in September where central banks started to loosen up here, and also as well the Treasury General account and all the other things that can actually contribute to global liquidity went from around 24 trillion up towards 26.5, a $2.5 trillion expansion of liquidity. So many people were convinced that that was it, that we were going back to good times. And at the end of the day, liquidity is still corrected here. When we don't have that depth here and the momentum of increase in liquidity, we need to be wary about our expectations of where markets can really go. And it may very well be a sign here that if the Fed is starting to loosen on its balance sheet reduction, as well as other central banks, and the Federal Reserve and other central banks are starting to cut interest rates substantially, that something out there has likely broken. It doesn't have to be as big as the housing crisis. It doesn't have to be one particular domino that sets everything off. It could just very well be that we're going into an earnings recession, and that's typically not a good period of time throughout history for equities, for risk on assets like crypto, right? We can't really argue that crypto is this risk off sector when the biggest stuff out there is Bonk and Bob and ordinals and all these speculative technologies. We got to be realistic about that, guys, and not get caught up in the FOMO. So that's why I've been big on the idea that, hey, we can make some short-term moves here in altcoins. We can far outpace the returns of having to hold Bitcoin over the last year. And outside of this, well, we can lock in profits. We can be happy, get out, be back in cash, and see how the long-term trend holds up. Because I really don't think, we've heard this narrative before in 2008, we heard about the soft landing back in 2007 that was predicting that everything was going to be good, stocks were starting to rally and recover, and then things started to head south very quick. I can't tell you many times throughout history where we have these circumstances of inflation and we have a soft landing. I can point to many examples where things don't go so well in the near term. And I say that as someone who does believe that the number goes up and to the right, that money debases over time. But those periods of confusion, of no trend, can be really detrimental and trap a lot of investors during periods of peak euphoria, believing that everything is returning back to normal. So, anyways, guys, rambled on a good amount here today. I hope you guys enjoyed this video. I hope you'll stay tuned for the video on Wednesday. We've got a lot of jam-packed data that we're planning to get in there. I'll try to get it out on Wednesday, if not maybe on Friday. But that's it for today's video, everyone. If you happen to like it, consider dropping a like. And again, if you guys are interested in supporting the charity auction on Teddy DAO, if you're looking to check out Lux Algo, or check out CoinX as an exchange where you can get access towards an array of altcoins, of all the links down below in the description. But thanks so much, guys, for tuning in as always, and I'll see you guys on Wednesday at 6 a.m. Eastern Standard Time. Take care, everyone.